Good morning and welcome to the Killik & Co market update. We've seen a bit of weakness in some of the major stock indices towards the end of this week as markets react to the latest comments and plans from President Trump. Here's the S&P 500 index over the last 12 months. After hitting a record high of over 6,100, it's now back below 5,900. A segment of the market that has shown particular weakness is companies that supply the US government. Trump has been talking about slashing government expenditure, and that's been bad news for companies that are big suppliers to the US government. One of the worst impacted has been Palantir, which specializes in data analysis for intelligence and counterterrorism. About 60% of Palantir's revenue comes from the US government. After experiencing a strong share price run at the start of this year, the shares have come right back down following Trump's comments. We've also seen a bit of weakness in Accenture and ServiceNow, both of which supply the government, although to a much lesser extent than Palantir. We would argue that companies that help the government to be more efficient still have a valuable role to play, but please do give us a call if you'd like to talk about this in more detail. Another reason for the drop in the S&P 500 this week was the fall in NVIDIA's share price. NVIDIA now accounts for over 6% of the S&P 500, so any movement in the share price can move the entire index. NVIDIA shares fell 8% after the company published its quarterly results. This might suggest the results were disappointing, but it's worth considering that investors seem to have incredibly high expectations where NVIDIA is concerned. Here's how the company's profit margins have grown over time. They were well over 70% in the last set of results, which is a very high number. And then earnings per share, which is another measure of profitability, also showed a substantial increase on last year. And then we also like to look at the price to earnings ratio, which measures how expensive the shares are in comparison to the level of profit the company is making. The higher the number, the more expensive the shares are considered to be. You can see from this chart that the shares are substantially cheaper in price to earnings terms than they were 2 years ago. The revenues from the company's gaming division were a bit weaker than expected, and that was really due to some supply constraints that caused delays, so it is hoped that this will be a temporary issue. Please do give us a call if you'd like to hear more about our thoughts on NVIDIA. And lastly, there has been a bit of a drop in consumer confidence in the US. Here's how the confidence measure has moved over the last 20 years. Note the drops due to the 2008 financial crisis and the 2020 pandemic. In the area highlighted by the pink box, you can see a decline since the end of last year. Higher US inflation caused by Trump's tariffs could be weighing on consumer sentiment. This weaker consumer confidence reading tallied with some disappointing guidance from Walmart, which is the biggest retailer in the US. The company said it was expecting a period of weaker growth, which caused a sell-off in the shares. There are some concerns that Walmart will be impacted by the plans to deport migrants from the US, which may affect the numbers of Walmart shoppers, and it may even affect the number of Walmart employees. Moving on to have a look at next week, we are coming to the end of quarterly reporting season, but we are expecting results out from Costco and Universal Music Group. That's it from us. Have a great weekend, and we'll see you next Friday.